economic calendar. I like what I see on Monday, right? Plain and simple. Monday is one of those days we like to trade our plan and we trade strong, right? Because there is no economic data coming out on Monday that can actually fudge what we see. Now, be mindful, right? News, anything can come out, deals and stuff. All this stuff can come out, anything can happen, right? So understand, like, there could still be wrenches thrown. But as far as the choppiness and the sideways movement and any like negative impacts to the initial market that are actually planned to happen, we have none of that. It's a free Monday. And we know in those days we trade our plan and we trade what we see. All right. Tuesday, we have optimism index and job openings. Now, this is job openings delayed report, right? Strong chance this will already be priced in. So I'm not too worried about Tuesday either. Tuesday might not be a bad day. Understand, right? That last bit of data comes out at 10 a.m. So what are we probably doing? Paying attention to the market and pre-market and just probably waiting another 30 minutes before seeing where the market goes. Just because even though this might be priced in, ain't no telling how they're going to use this data to manipulate the market, right? So we got to stay ahead of that and stay smart. We're not just jumping in any type of plays, any type of moves, right? We're going to trade our plan and we're going to see what this data has to say. Now, Wednesday, what we've all been waiting for, FOMC interest rate decision. That means 2 p.m. Eastern time. We will know if we are getting a rate cut or not. Now, we play both ways, right? We're going to play the up or we're going to play the down. But what does this mean to us right now? Even though we got a free Monday, free data Monday, right? And minimal basic data on Tuesday, Wednesday can still affect Monday and Tuesday, right? You might see the markets being a little more sidelined, right? Maybe going sideways, getting a little bottom choppy, right? People kind of showing indecision or the market showing a little indecision until this decision is actually made. All right. So this can still affect this, but we're going to see how Monday plays out. As far as Wednesday itself goes, do expect the market to be choppy, right? Or to take an exaggerated position. All right. It's the same as if a stock has earnings, right? After hours. And that day for the market, you see a crazy run up in the stock from all the hopefuls or possible manipulation, right? Getting us all to buy it in and raise it up higher before they drop it on us. Okay. Or the opposite, right? You can see that crazy sell off, right? Everything's going down, stuff's bottoming out, stuff's just it's for market's falling, right? That's kind of the thing that happens before we run up, right? They want to get the stock cheaper so they can buy it and the market's going to run up. Now, that's not always what happens, right? But understand that could also be a sell off because, the people who actually make the market move, they know something we don't, right? Please believe they're going to get this information before we do, or, they're going to already be privy to what's going to come out in some way, shape, or form, and they're going to play accordingly. So understand the two things you're probably going to see on Wednesday is a little choppiness and indecision or a very exaggerated move in the market to either side. Okay. Now we entered in these bottoms, right? And we bought on the dips and things like that. So if you're in good positions, right? If you're holding long-term stocks, this is not the time for you to fear what the rate decision will be and what it'll do to the market, right? Because if you got in where you were supposed to, at the bottom or as close to the bottom as possible, we're not scared of a drop in the market. All right. Strong chance it might not come down to, the bottom entry we've gotten in. And if it does, we know we've invested in strong companies that will recover. Okay. And I just want to reiterate what interest rate cuts mean, right? Yes, we get happy about interest rate cuts because borrowing will be cheaper, right? The type of interest rate cuts we want to see are slow interest rate cuts, right? Steady interest rate cuts at the right time. What we don't want to see are interest rate cuts back to back to back to back, and we don't want to see them come in 50 to 100 basis points per cut, right? That shows strong weakness and fear in the market. Now, mind you, we've had about two interest rate cuts, and this should be the third or something like that, right? Um, Either way it goes, this actually isn't necessarily the best thing. And we already touched on this last Sunday, so I'm not gonna, beat a dead horse, right? But again, when we're shooting interest rate cuts, multiple interest rate cuts, that's us trying to, how do you say, get water out of a sinking ship. And not saying we're sinking or going to recession or a crash, right? But understand like that does show an issue with the current economy and we're trying to fix it. Okay, so the fact that we're doing rate cuts and if we do a rate cut now and we continue to do more, and if this rate cut is anywhere above 25 basis points, right, that is something we should slightly be concerned about. Okay, now the big banks and the investment companies know that. A lot of us don't. So that brings me to my next point. This rate cut can be bullish, right? But you have to, see it from both ends because that's actually a possible bearish case, right? Short term bearish, not long term. So rate cuts, boom, we get what we want. You can possibly see the market still come down some, right? And that's why on rate cuts, sometimes you will see the market come down a bit before it goes up higher, right? Because the people who move the market understand a rate cut, it's not the best thing as far as the sign of our economy, right? But it's a good thing for borrowing money, right? So again, you have this point where we can't necessarily decide which or say what direction it'll go, right? Just understand we've gotten in low enough on some of these companies, right? If you have fear of where it will go, I would wait until after the rate cut to trade. Long term anyway, right? Long term holds. So understand too many rate cuts or the rate cut basis points being too high is something we should be concerned about. But in the meantime, right, a rate cut in itself is still bullish, right? Because you can borrow at a lower rate. Therefore, people are probably going to buy more stocks, have more money to buy more assets and things like that. So, the overall outlook, if the economy can continue to go in the right direction or fix itself from the wrong direction, these rate cuts are still a good thing. All right, just understand the short term implications of what these rate cuts mean, and too many of them can do. All right. But again, anything can happen Wednesday, right? I'm not here to tell you it's going to go this way or that way. Anything can happen Wednesday. Just understand you can see the market get a little choppy or a little sideways, right? Up until that decision, especially on that day. The day of that market, right? We can see that as well. Or you'll see exaggerated moves to either side. Now we all know, right? Decisions come out too, but it's also about what he says after that, right? So the rate decision will come out, but then he'll have his conference. So this is important, but this is just as important. So let's say we start going up off of this, you're not in the clear until we see what happens here at 2:30 when he's actually giving us all this information and data and reasonings about the future of our economy. All right. No, I said a lot. Thursday, initial jobs claims and U.S. trade deficit. Those are always things to watch. That's always data to pay attention to. Okay. So it looks to me like Monday and Tuesday might be some chill trade days, right? Start big here, get your money here, and just kind of get a feel for these next couple of days. I don't really trade Fridays or I don't make calls Fridays at least. Okay. So we have Monday and Tuesday. We can go big if the market, determines so. Wednesday, be careful, right? We have data coming out until 2:30, and this is some of the most important data this quarter, some of the most important data this week. All right, so be careful here. Thursday, be careful there, be cautious, right? But you'll already know, right? We know when we have data that comes out in the pre-market, right? We'll know at 9:30 the direction the market wants to move, and we know the plan to play. All right. Now, in a regular market where it's just regular data, no FOMC rate decision, we know Monday will determine the initial movement of the week. Any patterns you see Monday, you test them out on Tuesday, and if those stick, Wednesday, Thursday will be the same thing ideally. Okay. But again, this is going to be a choppy data filled week, so just be cautious, right? The key to becoming a profitable trader, the key to making a lot of money in the market isn't how many trades you win, even though that's great, right? It's how many losses you can avoid. That being said, right? It's okay to stay out of trades. It's okay to go small, and it's okay to not trade that day. Sometimes you just need to pay attention to the data, right? And then adjust your portfolio as such. All right, that's enough of this. So again, Monday, Tuesday will be our days to snipe some stocks. Wednesday, we got to see what happens. Thursday, stay cautious. Fear and greed meter. Notice we were in extreme fear, right? Pay attention to this. We were in extreme fear a few days ago. Stocks were also down pretty low. We said to buy at these lows and we buy in extreme fear. Because as we see this start to come up right here, here, and even here, that's also when you see stocks start to come up, recover, and go higher. Okay. So, like I tell you, if this ever comes again, this is not the time to actually fear. This is not the time to actually start selling out your portfolio. You should have already started selling here, right? This is euphoria. This is where stocks will do bad and things will come out and people still won't pay attention. They're not listening. They're going to still buy it up, right? At any given time, the wrong thing will topple and drop that stock and you'll be stuck holding the bag, right? That's why we buy here, let the stocks run up and we start to trim a little bit here. Okay. That's how we use this. But we are in fear, coming out of extreme fear. As long as nothing else happens to bring us back in extreme fear, right? We can start looking for continued bullish cases. All right, let's get into earnings. Now, for earnings, Monday, right? If we haven't looked at this already last week or the week before, we're already late on Monday. After close is cool. Toll Brothers, interesting, but I'm not really watching it. What I am watching on Tuesday, AutoZone's a little too. As far as Tuesday goes, you can use these, right, to determine where volume might come into. I know a lot of people like the GameStop, meme stocks type stuff. You could possibly see some volume coming into GameStop, Cracker Barrel, Play. You can see some volume coming into Play. All right. I'm not really watching for none of these Tuesday. I'll probably take a peek at them. Wednesday, what I am watching for though is Oracle, right? We can see volume coming into Oracle this week as early as Monday, right? And what does volume mean? The swings on that trade can be a lot bigger than normal. All right, and that's what we look for in our trades. So look for volume to come into Oracle. Look for volume to definitely come into Adobe. Look for news to also drop on Adobe this week. All right. For Adobe around earnings, you can possibly see some news coming out, partnerships, issues, hit pieces, people talking bad about Adobe, things like that. Pay attention to these things though too. When companies want a stock to come lower so they can get in cheaper, you'll see a lot of hit pieces and bad articles come out that really don't mean shit. All right, that's just a sign to pay attention because if that stock is coming down off of the weak news, right? They're just looking for a reason to basically drop the stock behind closed doors behind the scenes and get in lower before a big run up that's about to come. So those are possible signs, right, in the market and how they can manipulate stuff. But watch for Oracle and Adobe to see volume come in. All these are actually watchable, but these are only two that I would actually put on my radar. Now, Thursday, of course, we have Broadcom, we have Lululemon, and we have Costco. All right. I would definitely watch for volume coming into Broadcom, Lululemon, and Costco for Thursday. Again, you can see these stocks start to move as early as Monday, leading up to their actual earnings. Okay. So pay attention. Now, what I always like to point out is that one stock that can change the whole market, right? And Broadcom is that stock. If Broadcom comes down heavy, right, off of bad earnings or just not liking what they say after the numbers come out, you can see the tech, you can see the semiconductor sector come down. You can see the chip sector and all of those start to come down off of Broadcom coming down. Now, if Broadcom shoots up, you can also see the semiconductor chip sector shoot up alongside with Broadcom, right? So these are ways to look for trades, right? If Broadcom comes down Thursday, off of some crazy bad stuff, right? That means Friday you can see a continuation on that downward trend on Broadcom, but you can also hop in a different stock that might be cheaper in the semiconductor sector, right? And watch that come down with it. Same to the upside. If Broadcom comes up, right? And we don't necessarily, sit here and advocate to hold through earnings, right? If you're not already holding it prior to, but you could play that movement in that direction the next day if it continues. So if this goes up, you can hop in a cheaper semiconductor stock or a stock related to Broadcom that could also go up along with it on that continuation, right? Those are sympathy plays, and that's how you do those. That's also a way to get a beat on which direction the market will probably go. So if you see Broadcom go up, you can bet that your semiconductor stocks that you're already in will probably go up off of that too. Okay, there's a lot of ways to determine direction. You don't have to be in the dark. But yes, that is earnings for this week. Like I said, Monday, Tuesday for me it's lackluster. I'm not too worried about those earnings stocks. But Wednesday I'm watching Oracle and Adobe for sure, and I'm watching Thursday Broadcom, Lululemon, and Costco. Okay, so that's earnings. Now let's get into some stocks. First one, NVDA. Now NVIDIA in the overnight market is currently up 4 cents, nothing crazy, pretty much stagnant. Uh, I want to point out, right, we have not gotten above that level we're really looking at. So we're above the 10, right? We're above this 10 EMA, the yellow line. And we use EMAs in here, the 10 specifically. We have a candle close right above the 10 EMA. We had another candle open and close above the 10 EMA. Even though it's a red candle, it's still held above the 10 EMA. So we are not yet bullish, or my bad, bearish on this bounce until it comes back below this 10 EMA on the daily. All right, so if we're not already in it down here, what we're looking for, right, is that break above these upper levels where it keeps tapping and coming down, tapping and coming down. It needs to tap again. This is our accumulation zone, right? This is where you can accumulate those shares. Here you saw that hammer candle. Boom, from there it's been trying to make its way up. So there were a lot of indicators, right, that Nvidia was going to go up, which is why I kept telling y'all, right, look at Nvidia. All right, start buying these strong stocks while they're down here at these levels because you're going to see a bounce. As you see, the MACD has crossed, the RSI has not crossed though, right? The RSI has not crossed. It touched and came down. Once we see that RSI actually cross, you can expect Nvidia to get some more fuel for that rocket move to the upside. All right, so right now we're in that accumulation phase on Nvidia, but as far as a bullish case goes, we need to get above with volume and strength. We need to get above that 185 level, right? We need to get above that 185 level, preferably clear every high in front of this big red candle, right? This high is cleared, this high is cleared, this high, but this long candle right here, right, with the high of 185.66 needs to get cleared too with some strength. Above that, you can see that move to the 190s. Okay, so pay attention to those levels and those numbers. Nvidia above that 185, 185.66, you can see a move to 187 and then 190. Okay. But we've definitely accumulated down here. So we're just sitting back waiting for stuff to happen with our stop losses raised. So even if it comes back down below the 10 EMA, we're going to get out green or trim green. All right. So again, we're just accumulating down here. The big move will be above that 185. So just keep looking for that on NVIDIA. We don't have it yet, but that's where we're at. But this is a beautiful look though. You got that big drop, that hammer candle, and that curl up. And it tried, and it's going to try again, possibly. That third tap is generally the charm. So we'll see what happens. The next one we're going to look at Tesla. Everybody loves Tesla, right? Cool. Let's take a look at these levels. So be cautious off of this candle right here. If Tesla, let's see what it is overnight. It's down $1.80. It's 453.20, right? So Tesla below four, basically the low of this candle. If it revisits, excuse me, the low of Friday's candle and goes lower, we're looking to start touching that 448. All right, the low of Friday's candle was 451.66. If we drop below that, we're going to try to touch this previous resistance, all right, which is acting as our current support, which is this big green candle right here. All right, now we know NVIDIA likes to make those $10 plus moves. So if we do lose that 450, 166 level, you could probably see mid 440s, right? If not lower. So a beautiful move would be 445, right? If we lose that 450, 166, we can come as low as that 455, or my bad, 445. All right, that's to the downside. And I'm talking about the downside because I don't like how this candle closed on Friday. But, right, while we're still making this move to the upside and Tesla's still a hot stock, if we do manage to get above Friday's close, which was 455 exactly, we can look for a retest of the high 458.87, right? Moderately, though, we're looking for 458. We can leave that 87 on the table, right? We could take that close of 455 right into 458 and not worry about waiting on that 458.87. Now, understand if we do get above that 458.87, we have skies for these highs over here for Tesla to run as high as 460s. All right, 467 up here. I'll mark that out. Boom. We tapped, we came down, broke, came down, we tapped again, and that's where we got our big drop. What does that tell us when we hit those moves right there? We hit these moves and get that big drop down. That is a strong level to watch. That is a magnetic level to watch. That is the level it wants to go back and fight again, right? This will be the big boss. So as long as we get above that 458.87, ideally 459, we're looking to go back in these 460s and fight at it again to get above these levels. Otherwise, if this ugly candle remains, right, and we've dropped below the low of that candle 451.66, we're looking for puts to 440s, 445s. All right. And I'll mark that too, just for the sake of seeing it. Make that red so you know where that's going to. Boom. That's Tesla. CRM. Now we mapped out and talked about CRM already, right, before the earnings came out to see where it would go. We talked about this upper trend line right here, right? It slightly broke above. What is CRM right now? This is Salesforce, by the way. It's up 52 cents. It's at 261.09, right? So what we need to do, right? This breakout, it's a small one, right? But it still managed to break out. What we need to see is a continuation candle come tomorrow when the market opens. That being said, on that continuation candle, if we get above 261.88, right, we kill the high of this candle, 261.88. So ideally, if we get above 262 with some pressure, with some volume, with some good moves, you can see that go after 267s. All right. You see the moves this makes. If this momentum continues, these are the moves that it makes. That being said, we're going to play the moderate side of things. So above the high of 262 is basically, we'll round up 262. We're looking for 265 because we like those numbers, 265. Then we'll go to 267, right? And when a stock gets above 265 or when it gets above that 5, right? 7 is ideally the next number. Just like when it gets above those 10s, that 3 is the next number. All right. So again, if we can get above that 265, we're looking at 267 over here. But what we want to see first is us to get above 262 for a trade to 265. That'll be our first price target on CRM. Above that, let me change that color. 265. Then we're looking for a break of this previous high in the 267s. And that's basically how this works. I need you to understand that is how this works. You get your breakout of the trend lines, then it goes to take out previous highs, right? High after high after high. Now understand it doesn't always go straight there, right? It can kind of play, come down and retest, right? That bump and then go. We've been over this. You got to look for those as well. You got to pay attention to always watch your trades. But we do have this 10 EMA crossing the 20. That's good. We have this MACD above the zero line. That's good, right? Showing that there's strength to the upside. We have RSI right here in the overbought zone. Now, people teach that RSI overbought is one of those danger zone areas, which it is. What goes up must come down. And once we've hit right the major overbought zones, we're looking for it to possibly start coming down. But as long as it's still above this overbought line and we still have green skies here, That's rocket fuel for the current trend to continue, right? Because that also shows the strength of the trend, right? You haven't been taught wrong. You just only been taught one of two ways. Yes, when it's overbought, you look to sell because eventually it is coming down. Either to reset and go higher, right? Or just come down and shit the bed. Cool. But while we're still holding up here until we've crossed below these red dotted lines, this is actually just fuel showing us that the upward trend is still strong, right? So we're cautious, but we're not scared. These are all still good indicators of a stock that wants to go up. All right. So we can play the downside if it happens, but what I'm looking at right now is an upside or nothing right now. So if we can get above that 262, I'm playing it to 265. If we maintain that momentum above 265, I'm playing it to 267. If those conditions are not met, I'm not playing it. It's simple. Now, remember this. Once you get into your profit, right? If you get in above 262 and it's going and going and going, start raising your stop loss so you can't lose. We're not always right. It doesn't always hit our price targets. But if it gets in there and starts going above and you start seeing green, start getting those stop losses up so you at least make something off of it, right? And live to trade another day. But that is a Salesforce CRM. Next stock, Meta. Meta is big, right? I want to go over Meta because I prepared us for this already. All right. We've already talked about Meta, right? The bounce. A lot of us should have already been in the bounce, should have bought that turn up for the long term. What I want to go over is this, right? What do we always say? What do we always talk about in this chat? Gaps get filled. All right, gaps get filled. We have a gap right now. If you're not in here, I'm not saying get in now, right? Because it could very well come back down and give you another chance. Who knows? Probably will. But once we start creeping into this box, once we get above 680.96, so once we get above 691, right? 691, above 691, I am looking for a run to 700, right? At a minimum 700. A good point to get to is the 705s. All right, because that'll be around the current or around this previous support level, right? That is actually now a resistance because once we drop below, that is a resistance level. Okay. And you see this big move here, right? This big move down. These are shorts and people holding puts, right? That being said, that's liquidity. If the buyers can win, if the buyers can build momentum, and the buyers can outbuy the sellers who are probably just sitting here waiting to take profits if it goes against them, we can start that chain reaction up, 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 taking all this money. That's why gaps get filled. Because a lot of times people aren't in here trying to sell. They've already sold, i.e., they've already shorted the stock. They've already bought puts from the stock and they're holding. And what they did was they have their stop losses here and they're more willing to get out than we are not to buy, right? You see this drop right here? If anybody's still in as is eating this drop up, they're going to cover up here. They're going to cover, they're going to sell, they're going to get what they got left, right? They probably already sold half, which is why we were able to buyers anyway, not we, but why buyers were able to win, right? And come up as much as they did is because they were already selling and trimming their position, right? As we started getting up and trends started changing, they were selling their position, right? They were taking profits because they started here. This is a lot of profits leave on the table. Of course, going to take some of this. So it's easy for us to go in and buy, right? That being said, this is now what's left. If we can get above this level, right? Right here, get above that where are we? 81, right? If we get above that 681, this is just scraps on the table. This will be easy to break through with good news, good momentum, or a good day. So watch this gap right here. That's what I need you to do. If you're not in here, I'm not saying get in right now. Watch that break of 681 though. That gap should get filled at least somewhat, get us started to 685 and 700. All right, so above 681, let's go to 685, right? Let's get something out of it. And if it continues going, let's have our eyes set on 700 and then 705 and so on. Okay. Again, right? Like I said, this big drop, it wasn't necessarily a misunderstanding, right? But we don't see many stocks taking a big old tax credit like that. So Meta, not only were they spending money on sniping at other companies, scientists, tech engineers, and head engineers, right? With people not knowing why. They also took one of the largest credits you'll ever see, right? They paid out a crazy amount of money. And we see money leaving a company is bad, right? Now, if we know where it's going, that's something else. But this was a tax credit, right? That being said, he did this for a strategic reason. But I'm pretty sure we would have preferred him to have held on to that money and had it as money on hand, right? That looks better on the financial sheet. So, of course, there was a sell off of that. That's not big enough to say Meta is dead, and we know that's not the case, right? Not only that, Meta, right, Facebook, they pretty much, I think they sold off their losses or something like that with the metaverse itself, right? And people were already seeing that metaverse isn't doing what it's supposed to be doing. So the fact that they said, all right, we're going to sell off majority of that metaverse situation, right, and start working on making up for that, that's also a good sign. So we could actually see a decent bounce up off of the news that Meta is actually balancing his financial sheet properly now. In a way, well, no, not to say properly, but in the way we wanted to balance that financial sheet, right? We've already seen the metaverse as a loss, right? Now they're accepting it as a loss, and that's good for investors. So, right, pay attention to the news, not just the stock. You got to know what's going on with the company. But again, above 681, right, we're in that gap to fill. Just know we're going to start running even higher. All right, so Meta should be on your list every day until we're back in the 700s. SMCI, another swing trade, right, that we talked about that we should be in already. Hey, we're still low. We're still down here. We're still low and down. We're not worried about it, right? We hit price target right here, 34, right? We're looking for the 36s. What's the high of this candle? Basically 36, right? Our next price target on SMCI is 36. SMCI, and I haven't sold. I'm still in it, right? SMCI right now is up 40 cents at 35.09. Okay. So we're looking at another dollar move to 36. If we can get above that and sit above that, right, they were looking for the 38s. All right, we're playing like that, right? Top for top. As long as we're down here, as long as we get in like we were supposed to, down here where the getting was good, we're in a good position for a decent run up back to 40. All right. Now understand, you see 39.65 being this previous support, which is going to play our resistance. That's why 40 is the level to watch. We got to get above that with some power momentum, right? And some actual technicals, right? Might even get up there, play around with us for a little bit, and then start to make its way, right? Once we get above this 200 EMA, currently sitting at 44. What is this sitting at? 44.16, right? Above that, then we can get even more bullish on it, right? But right now, we're looking for $40. All right, we're looking for $40. If you got in when I said get in, our stop losses are raised, so we can't lose. Now, as far as a day trade, I'll say this: I don't necessarily like the movement on SMCI during the day as far as big moves and whatnot. So I'm not really looking to day trade it. I'm looking to hold the position I already have. But we can drop it down for a little bit and let's see. We're not looking bad. If this curl is actually curling, we're just at the beginning of the curl. That being said, SMCI, if we can get above $35, which we're already above $35. So if we hold that $35, start catching momentum, right? Catch momentum, and we clear. Yeah, there's nothing to clear, honestly. Tomorrow, look for SMCI. If it catches volume momentum and the market is bullish, right, to start taking out the rest of this red candle up to that 36.10 level. All right, so about a dollar move on SMCI tomorrow to the upside. Right now, as always, we're just looking candle for candle like a playback. If we lose Friday's bottom, right, which is 34.08, we could very well come back down, right, and test how the floor is at the 33.45. All right. But again, that's why I don't like day trading SMCI. I like when SMCI falls and then sneaks up on everybody and takes off of some random ass contract with NVDA or one of these other companies. Okay. Because again, like I said, we have power as an issue, right? We need energy for these data centers. We have chip constraints, right? GPUs and things like that. And we also have cooling. Cooling is always going to be an issue, right? We got to find a way to keep these systems cool, these GPUs cool, these CPUs cool. That's where SMCI comes in. All right. And I want you to show me another company better. Not saying there isn't one. Show me one. All right. Ooh, another one I like, right? This is just one I like, technically speaking. Shop. Shopify, right? And it's obvious why I like it. I hope it's obvious why I like it. If this is a shoulder, right? And this is a head, then that would make this another shoulder. And if that's a head inverse head and shoulders, which is a bullish pattern, this is our neckline, right? This is our neckline. So if we can get back above 162 with some strength, right? 162 can take us to 164, right? This candle right here. And then from there, we're in the races to go all the way, not all the way up, but as up as we can, right? That being said, we can play shop above 162 to 164, then get in there about 166, 167. And ultimately, if we can get above 170, shop can move, right? If we get above 170, shop can move. Right? These green lines that you see are important, right? They're part of that indicator pack that I have out there. Above these green lines, moves definitely happen. So if we can get above that green line and everything's good, we're up there. But right now, we're looking for above 162 on shop. All right. Shopify 162 is going to 164. Let's make sure it's not already happening. It's at 161.37. So tomorrow, if you see Shopify above 162, right? Look for that to go to 164. Above 164, we'll go 167, 165, then to 167. All right. Above 164, 165, then to 167 on Shopify. All right. But all I want to do is point out that this right here is giving us an inverse head and shoulders. And not only that, it's completely identical, right? If I cut it down the middle, right? What happens on this side is happening on this side, right? You got to pay attention to those things. You see this down, up, down, right? Same thing, up, down, right? Same thing, boom, down, boom. What's happening on this side is happening on this side. So this is actually this right here. This next little peak down is this peak right here. So we're actually in the range to possibly go higher to about this area up here, the 170s. So this could be a $10 move over time. All right, $10 move. I don't know if you knew about that, but the more identical one side is to the other, the easier it is to read. And this is damn near identical as it gets. All right. So again, if we can regain that 162 and go to 164 from there, we're looking like we're in good hands for that bullish move above the neckline. All right. If we reject from here, then everything I said is out the window, but we're not in it anyway because we're not getting in early. We're waiting for the breakout. All right. So again, 162 can take us to 164. 164 will get us to 165, then 167, then off to the races for that 170 hit. So pay attention to shop. Look for news. Look for reasons why it could possibly go up, right? Because as of right now, we have a red cross. So again, we have to break 162 plus. That's Shopify. Now I wanted to go over a lift, but I'm not going to. I'm just going to show you, right? We're still here in that box. We're in that box, right? Boom, in that box right here. So as we come, if we come back into this box, look for some more, buying to happen on lift. Lift is still in play. Why? Because this was your next accumulation level. We know if it doesn't break below this, we're still buying on these drops. Came up, dropped all the way down. I hope you took some up here, right? It's holding here. We knew tap one, tap two, tap three. We knew this is still an accumulation zone, right? A bounce area to possibly buy here to run back up and go even higher into the gap. Pay attention to those patterns, how it moves in those levels. We don't draw them just because we like to draw. All right. But again, I'm not here to break down lift. Just know, right? This was your accumulation level to watch. Every time it comes down, you either sell here and buy some more here, or you hold it, don't get scared until we've broken below this level. Okay. That being said, if tomorrow we get up in this box, look for lift to pick up a little more heat, right? But let's get into some crypto. This will be quick. It's nothing crazy for those who like to buy crypto on the daily. All right, plain and simple. We have this high, we have this low. We have this higher high, we have this higher low. Okay. And that's how it's been moving. High with the low, high with the low, high with the low. We're not bearish on BTC until we break these lows. We have to have a lower low. We have to have a lower high, right? Cool. That being said, don't be scared. My bad. Let me go BTC, USD. All right. Don't be scared to have accumulated down here at this drop. Okay. That wasn't bad. That was sniping. We're not bearish on BTC until we drop below this. Now, I want to come back and tell you something, right? We've played the Bitcoin halving. I've played the Bitcoin halving, right? Those of us who paid attention, we played the halving, which is how we went from, even if we didn't buy in the past, we were at least buying Bitcoin at 15 to 30K and watching run up to the 100, 120s, right? Because we know what the halving was. Just be mindful, right? The halving is not the only thing in play right now. It is no longer about the halving only, right? The a strong majority of Bitcoin is already getting bought up, right? That being said, the government and institutions are now heavily involved in Bitcoin, which is why you need to expect manipulation, right? And you need to expect Bitcoin to basically not be perfectly aligned with the way the having has been the last few cycles, right? The having has been aligned. You can read that shit like a book. But now that we have these big institutions involved and other forms of um, ETFs and equities being created all off the back of Bitcoin, right? You have to be mindful. Don't be scared on this next run up, right? To start trimming, right? If Bitcoin goes to 200K and you trim that retest of 126 after getting in at 70 or less, you can't get mad. You made hella money. You might not have made as much money as it could going to 200K, but it's better than sitting there and then watching it drop out of nowhere because they're definitely going to basically sell on you, right? And again, I'm not going to tell you where Bitcoin, I'm not a Bitcoin master or guru. I've just followed the halving, and that's how I've made money off Bitcoin. That being said, I've also seen this time and time again where retail traders have a good thing going, right? The general investor has a good thing going. Then institutions back up the truck and get in now and they start fucking everything up. So again, be mindful and don't be scared to take profits if Bitcoin bounces from here and goes higher, okay? But as of right now, we're still bullish on Bitcoin until we break these lower levels. That's basics on structure, on market structure. Uh, the chart I like more than Bitcoin though, as always, is XRP. This was some previous stuff I was writing out that I have in the chat from back in the day. But anyway, just looking at the chart, right? Here, I'll hide. Can I hide the? It won't let me hide it, so I'm not going to hide it. But you see down, up, down, right? This looks like a bottom to me for the current downtrend. This looks like a bottom. This is beautiful, right? Because it gives, right, similar levels. This level and this level. Levels right now are levels from the past. So that means these levels are still holding, and we know what happens at these levels. You get a little pump, maybe a little dump, and a little runoff, right? This one could be running out of, short-term juice because we have this little drop below the line in the come up. This drop below the line in the come up. We have this drop where it touches the line before taking off. What happens here? This drop touches the line, so this could very well be the move that happens as XRP makes the takeoff. All right, we don't need to be mathematicians, right? Look at the patterns. Look at how they echo how, the future and the current echoes the past. All right. So I'm not saying XRP is going to take off. I'm saying it very well could take off and that this could very well be the bottom. All right. That being said, if you aren't touching XRP now isn't bad because we have this level to go off of. We know if XRP gets below the 160s, it's bad business. That'll be your stop loss to A. I'm taking this L. It is what it is. All right. But that's why when the stock drops this far, you definitely need to watch where the bottom is, right? And get in as close to the bottom as possible. So yeah, keep your eyes on XRP. That is all I have while I'm on and while I have you guys. Do I have any questions? Any questions, any concerns? Somebody have a stock they want to bring up, they want me to pull up, anything like that. That's what I'm here for as well. Let's do it now while we're here.
What's your opinion on MicroStrategy?
Ooh. All right, let's go to it. Who we? Okay, so MicroStrategy. I'm MicroStrategy is cool for exposure, right? But I wouldn't invest in it. And I'm not saying it won't go up. I'm not saying it's not a good investment. I'm saying I wouldn't invest in MSTR because there's other better ways to invest on the same thing that's moving MSTR. And if you've managed to pay attention to MSTR over the last year, right? Then you know that when Bitcoin moves, right, MSTR moves, but MSTR also moves a lot greater than Bitcoin does. So if Bitcoin drops, MSTR it has violent drops. If Bitcoin pumps, MSTR can pump, but I've seen MSTR not pump as much as Bitcoin does. So the connection to MSTR in Bitcoin isn't strong enough for me to invest in MSTR as my exposure to Bitcoin, if that makes sense.
One more question. I remember you posted something about Pan Alto running
Oh,
to 220.
yes, Palo Alto.
Yeah. What do you think? It's still gonna what's your opinion still?
Ah,
Like,
easy. Got you.
yeah.
So the I posted right, Palo Alto could run to 220, but I posted right that it is bullish and that it is in a bullish trend, right? So I wanted us to at least eat off the trend itself, right? The triple bounce, right, off of the trend line. And currently we're up. That being said, I'm still bullish on PANW, right? And ultimately, I like the retest of high, so I'm going to put 220. But you see this big red candle right here? This is the first boss we always got to beat, right? That initial or that big drop. So if you see Pan W, right, that'll be the next level above $200, right? We're playing it top for top. 208 will be the next level. Let me see. 207, 208. Right? Once we get above that, then 220 is definitely on the table. I can see PanW going back to 220, especially because of the part it plays, right, in the current AI trend, right? And based off of the past, it bounces off that trend line and it retests, bounces off and it retests, right? I'm not saying we can't come down tomorrow and maybe touch the 200 EMA, but until we drop below this 200 or until we drop below this lower trend line, right, we are now in bullish, actual bullish territory to the upside. So, in short, I'm still bullish on PanW, right? My price target is still 220 as the ultimate target where I'm full position gone. I'm out. I don't care where it goes after that. But also pay attention, right? You don't want to be caught holding the bag, right? If you got in PanW when I said you're already up. I'm not saying get out now, right? But if we can get above that 200, right, we have this next level to fight to of 207, 208. So that's kind of how I would play it if that helps, right? You don't have to stay in till the 220. That's where I see it going, right? But as long as you're up, right? And know when to trim, right? Know when, the play might not go as planned. But as of right now, I'm still very bullish on PanW, Palo Alto. And 208 is the next short term target above 200.
Okay, thank you.
No problem. And I appreciate the questions, right? That's what I'm here for. Like, I
Yeah.
want to answer any questions that come. If I can help, that's what the Discord is for. Any more questions from anybody? All right. Next things next, right? Like I said, keep your eyes open for the financial class this week that'll be coming out, right? Just to kind of keep us ahead of our finances and give us some tips on how we should move in the current economy. Outside of that, I will see you tomorrow, right? bright and early 6:30.